So, this video is all about 5 timeless trading lessons that would have cut out huge amounts of my trading journey. Specifically, if we were to highlight, oh, just put this down a little bit. If we were to highlight this area right here, this is my trading journey. It took me probably about 3 years to get to kind of this point over here, and then maybe about 2.5 years here, and then about 3 years was kind of around about this mark over here. And so I could have cut out huge portions of this journey just by understanding these lessons here. I probably could have cut off more, but just this alone will be from this first point here. So the first point is base your strategy on something that is real. Those first couple of years, I was just practicing every single strategy that I'd learned online. I had no idea of really how the market worked. I had no idea. I just thought everything was pattern recognition. Now, pattern recognition plays a role for a lot of traders, and that's fine. But it's important that you understand what that role is. And specifically with this point, it's like base your strategy on something that's real. What does that mean? Well, I'll give you a classic example with and it kind of rolls into the second point here, which is understanding. Let's just say that we are a smart money trader. I've been on a bit of a rampage on smart money at the moment, guys. But you've got a classic double bottom, equal lows, whatever the hell you want to call it. If your entire strategy is based on the idea that, okay, well, when this happens, we tend to do this, we tend to sweep the lows and then kind of come up, and then we can trade this for a buy and take it back up higher. This is not necessarily bad, but the reason that you believe in it is important because it determines how you change things if anything goes wrong. So, if someone just trades this because they understand and they accept that, look, this is just a pattern during a very specific time of day that I have noticed and that I have tested and that I understand tends to produce a certain behavior, aligned with ideally some volatility forecasting or something outside of just technicals, then that's okay. If you are basing it on something like, okay, I think that, the broker or, the market makers or whatever the hell you want to call it, are targeting my stop losses and most people's stop losses because there's bound to be some liquidity here, and then that's getting swoops and then taking prices higher. That is not good. Why? Because even if it works a percentage of the time, the reason why you are getting involved is fundamentally flawed, which means when this stops working or when market conditions change or anything changes, you're going to be trying to fix it through a frame that was originally broken. Now, you may have got the result right. So, again, I just want to distinguish here between the cause and the effect. You may be able to have a system where you understand the effects really, really well. This would be an example of the effect right here. But if you have the wrong cause, then when that effect stops working, you've got no idea about how to address the underlying issue. That is a problem. And so when you are basing a strategy or you're improving a strategy, base it on things that have actually been proven. Don't base it on what random people online tell you. That is including myself. If you hear something and you don't agree with it, do your own research on it. If you hear something and you do agree with it, make sure you doubly do your own research on it because you don't even know if it's true or not. Now, I do my best to provide what I believe to be the most true stuff I can at my current point or whenever I'm making these videos. But at the end of the day, maybe not everybody has that same level of those same standards. And also, even if they do, everybody's different. Everyone's always learning, and that's normal. And so, it's important to do your own research because you never know what stage of somebody's journey they're on. And I'm telling you right now, the kind of opinions that I had in each one of these stages was extremely different to the previous. And by the time I kind of got up to these sorts of areas, they are so unbelievably different to what they were back here, or even when I started kind of gaining some consistency. It's crazy. And so, really, really pay attention. It's why you shouldn't just listen to people randomly online. It's also one of the reasons that I say one of the best things that you can do once you get to a certain level is to really constrict the amount of trading information that you consume online. Most of it is just not helpful at all. Um, anyway, so next one is understand the basics. So the CFDs, pros and cons. This is something that literally people ignore. And sticking with this same kind of smart money-esque example, CFDs. What's something interesting about CFDs? Well, if you do not know, CFD stands for contracts for difference. What does this mean? It means it is a derivative. Derivative. I believe that's how you spell it. It might be with an I there. Anyway, whatever. So what does this mean? Well, when you buy, let's just say an FX pair, let's say you buy Euro USD, you're not buying the actual underlying asset. You actually don't own any euro whatsoever. What you have, contract for difference derivative, is a contract. Move my microphone so I can see the keyboard. Contract with your broker. You are essentially betting on price movement. Now, obviously, the brokers have lots of ways of making money, but essentially, a large part of the broker, you know, scheme is they will use a lot of losses from all of their losing traders to pay out the winners. It's literally kind of like a casino. They will use the losses from the losers and they will pay that out to the winners. It's kind of, in a sense, it does seem a bit like a Ponzi scheme, but it is a little bit more regulated than that. And there is a lot of nuance to it, but it does resemble, I just want you to think about it as a betting shop. This means that, especially when people come and they're like, oh, the markets are targeting my liquidity below lows. One of the many, 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 many reasons why that is false. I've dissected that in depth. You want to go and watch my smart money breakdown videos using actual science and valid research. But one of the reasons that I didn't mention in those is contract for difference. When you are buying, so let's just say you've got loads of retail traders. Let's just say we've got 1,000 retail traders that had their stop losses down here. You know something funny? None of those stop losses, assuming they're all trading CFDs, right, are actually in the market. They're just with the broker. The broker, you're basically placing a bet and thinking that your bet is actually influencing the outcome in some way or another, when in fact it's not with contract for difference, because it is a derivative, meaning you're not trading the actual asset, you are trading on top of it, a layer on top of it. Now, CFDs are a bit of a shifty industry in general, but you really need to understand this because it kind of rolls into that first point that I made as well about base your strategy on something that's real. This is a classic example. If you believe that people are targeting your stop losses, number one, that's done because we're retail traders. We make up such a tiny percentage of the market. It literally makes no sense in the traditional sense. There are ways they can target retail, but it's not in the liquidity pools, all sort of stuff. And then on top of that, your stop losses aren't even there. They're barely even visible because you're just betting with the broker. But most people don't truly understand this, and so they end up building strategies around theories that they think are valid because they don't really understand the game and the environment. I could have saved, ages and ages of this journey, maybe about this much, if I just understood the actual game that I was trading to begin with. And it's not even that this is necessarily going to change your trading, just this one idea. It's like understanding this is going to save you time. It's going to filter out how you make those decisions, which will either lead to a good or bad outcome, and basically how you improve. Next one, leverage the insights of people smarter than you. This is not a fancy way of me saying that I am smarter than you. In fact, I am not saying that whatsoever. I'm saying that both you and I should leverage the work of all of the people that have come before us. And just for reference, guys, when I'm talking about leverage the knowledge, so let's just say this is you and me. We're pretty happy. I don't know why I was about to draw a penis on him. That would have been weird. Anyway, we are always trying to move forward, right? And when we look back, we can find and use all of the skills that have come before us. Like, for example, if you'd come into trading and there was no education on it whatsoever, you'd be way further back than you are now. However, there is a lot of information, but the problem is that there's so much information, it's like it's impossible to basically differentiate the signal from the noise. And so, what's a simple framework to break through this? Well, it's to rely on things that are timeless, that are evidence based. So, what does this mean? When I say leverage the insights of others, I don't mean random people on the internet. That is a easy way to fill your brain with junk really, really quickly. When we want to leverage the insights of people smarter than us, we want to look into the research. We want to look into the research. We want to look into the studies, etc., that were done by people who are very, very intelligent, who have gone through tons of evidence and done calculations that the vast majority of us probably can't do. And they've come to conclusions. And we can simply just take those conclusions and say, okay, based on this set of conclusions, maybe you look at 10 conclusions. what does this tell me about the market? And how could this influence how I build a strategy, or maybe how I improve a strategy, or maybe how I understand the market? And the more you do these things, you begin to develop a more rounded perspective. Now, I'm going to demonstrate that with the most ridiculous diagram possible. And just imagine this guy's head getting bigger and bigger and bigger until hopefully it doesn't explode. But essentially, we gain this knowledge kind of like a massive field around our head. God, this got to be the worst diagram or analogy on the planet. Um, we take this all this knowledge and we apply it to our decision making, because really that is the only filter that things move through, right? Everything that we know is only really useful to us because it helps us make better decisions. And therefore, if we fill our head with good stuff, we're more likely to get good outputs. With good inputs, good outputs. Simple as that. But unfortunately, what most people do is they'll go and they'll look at random people online who are making YouTube videos, and that includes myself. There's loads of things that I've said that are probably massively inaccurate, especially in the earlier videos and stuff like this. Um, and so what I'm saying is, whether it's me or anybody else, research, 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 research. And when you're looking for research, don't just look for one article by some random person on the internet or even a reputable brand in some cases. You want to look for science based wherever possible. Now, that might sound boring to some people, and that's fine, but you can use many tools now, ChatGPT, to summarize them, to do various things that remove all of the complicated technical jargon if that's not really your vibe. Because frankly, it's not really my vibe either. I don't particularly like sitting down and going through endless stuff, endless technical stuff. So gather data, but don't overfit. This is so common, right? People will go and they'll show me their spreadsheets with like 100 columns, each one testing a different variation. They'll have the trade, so buy or sell, then they'll have the screenshot, then they'll have notes, then they'll have three different risk reward profiles, and they'll have time of day, whether the time frames align, they'll have any confluences, correlations, maybe a few more of those, maybe something else, something else, something else, something else, something else, something else. Now, this isn't totally useless. In fact, this is something that I actually am a big fan of in certain contexts, because it can really help you to understand your system. And this is especially true for those people who are trading on a very narrow time frame. So if you want to, build out a system in the way in that kind of way, this would work well because you're going for a specific time of day, and going through all the data allows you to understand relationships in that data. Now, there is a point where it becomes excessive, though, and this is really the point that I'm trying to make. Because if you gather data, you must understand that that is still past data. Even if you executed on it in real time, once it's done, it is the past. And if you are trying to optimize too much your system for the past, then it's called overfitting. This is basically where, because things are over optimized for the past, when you actually meet the future slash the kind of new present real time trading, what often happens is your results don't mimic your backtest results. I'm sure you've all had this in some sense or another. You have decent-ish backtests, you go and test it in the live market, and it doesn't work. Of course, there are many reasons for this. Some are psychological, but one of the big strategic reasons for this is because you've over optimized for the past. The goal, and it is a bit of it's an art and a science, learning how to not over fit the data. Don't over optimize for the past. This is why backtesting is useful up to a point. It's good to get to specific real-time data, and modify things slowly over time. Because when you've got, let's just say a list of 200 trades that you've back tested, which will represent with a B, it's very easy to just comb through that data over and over and over again and be like, oh, what if I tried this, what if I tried this other thing? And you start adding all these columns, you're like, okay, I found that this risk reward works best, and then this, and then this, and then this. The problem is because you can comb through that data so quickly, it actually encourages overfitting behavior, because it's so easy to test new things. One of the unwritten benefits about forward testing, or just practicing on a demo, is because you're, not getting as many trades. Let's just say, as an example, you're getting 5 trades a week. Because of that, that slows you down by default, which means the way that you change and look at your data is naturally curbed. It's different, which means that it's harder for you to overfit. So it's one of the easier ways to just psychologically remove that urge and that kind of need to, or temptation to overfit. And the last one, I don't know what's going on with these arrows here. is to prepare your mind. Now, this is not me going to be, I'm not going to sit here and start lecturing you on preparing your mind. You probably heard a million people say this in the past. But what I'm going to say is the things that have helped me the most is splitting everything into internal and external. What does this mean? Internal. These are things, and you guessed it, things that you did internally. These are going to be, your classic things like what you do with your body and what you do with your mind. So, an example of each would be meditation, and then body would be something like yoga or breath work or something like this. Now, whilst these things are really, really great, meditation has been a huge part of my life, and I'm extremely grateful for it. It is one of the big things in my life. In the beginning, that didn't really move the needle enough because I was so overwhelmed with so much trading information and losses that I was taking the whole time that I couldn't really see as much of a benefit with it with trading as I would have liked. So I was always a fan of keeping things really practical and environment based. So what does this mean? Well, it really is split into a few different categories. You've got the information in, and you've got uh, the environmental, I don't really know what to call this, environmental organization, let's say. These are really the two main things. Information in is a fancy way of saying what you let into your mind. So specifically, there's one key psychological, I don't know, technically you could say it's biological um, idea, which is has different names, but I kind of call it context switching. Every time you switch contexts, that depletes a large amount of your brain power. And so every time, for example, I look at, I'm doing one task and then you switch to another task and then you go to another task. Every single time you switch task, it becomes harder and harder and harder for your brain to focus. And we'll see this throughout the day, right? Every single day we'll go through, and every single new task we do, it's kind of a little bit harder to focus on than the previous. And this is a large part of why. And so this is also the same reason why social media doom scrolling is evil. Now, this isn't me, going on some sort of weird, kooky, culty rant about, oh, yeah, this is the devil, he's going to come and eat your head or something weird. This is just me saying, right, that social media, the very fact that you are scrolling, and I'm not all social media, but specifically where you are just bored and you're just scrolling on, YouTube Shorts, TikTok, Instagram Reels, whatever, because you're seeing so much information every single minute that it's really difficult to focus. For example, let's just say that someone gets up 30 minutes, first 30 minutes of the day, they're scrolling on TikTok, per minute, let's say they can get about, on average, I don't know, eight posts a minute, maybe even more. Let's just say, how many could you go through in a minute? Let's just say 10, right? So that means that we have 300 context switches in 30 minutes. Now, person two, first 30 minutes of their day, what do? They read a book or and literally anything else, right? How many contexts do they have? Yes, a book will cover lots of different topics, but it is covering it more in depth. That you're still on the same task, and that therefore it's actually, well, technically it's zero context switches. This is a huge difference because when you're trying to focus, whether that be on the actual task at hand or whether you're overtaken by the thoughts of, oh, I need to get out of this trade soon, even though you shouldn't, or break one of your trading rules or whatever. One of the big reasons that people fail at breaking their trading rules is because their mind is extremely noisy. And really, this is the kind of big daddy of all of this. It's noise reduction, specifically mental noise reduction. Because when your mind is noisy, it's very, very difficult for you to focus on what you need to do. It's very difficult to shut out the things that you're not supposed to do. It almost just all feels overwhelming. And we all know the feeling after we've been scrolling on social media. Our brains feel fried. Now, it's been scientifically proven that when you are in this state, it's much easier for you to believe lies because your brain's ability to differentiate good information from bad information weakens, which means that whether it's you watching another YouTube video, right, that's telling you something that is not really true, but you don't really have the energy to prove it wrong, or whether it is you about to break one of your trading rules, you are less capable of differentiating a good thought from a bad thought, good information from bad information. And ultimately, that's going to affect your decision making in a negative way. And so it's not just about, oh, like scrolling on social media makes me feel a bit like dumb and spaced out. Like that has knock on effects to everything else. Now, this isn't to say that you necessarily have to wake up and read a book. You can do whatever the hell you want. This is also one of the reasons why I say that watching Netflix for most traders is more productive, no matter what you're watching, than scrolling on TikTok, even if those TikToks are all trading videos, because it's not about the information that you're receiving in, it's about the context switches that you're exposing yourself to. And that massively determines how well you're able to focus, how well you're able to stick to your plan, etc., etc. You'll notice if you just do this for a week, it doesn't have to be read a book, just something that isn't scrolling on social media. Ideally, not watching Netflix either, just doing something that is really productive, reading a book or just getting straight to work or meditating or something like this. You will notice the difference that it has in your day. It is parabolic. It is absolutely unbelievable. And therefore, a simple solution to dealing with mental problems, and when I mean trading mental problems here, is to sort it out in a practical environment. Now, the second one is environmental organization. Kind of feeds in to that second one as well, because it's about how you organize your day. It's about how you organize what's around you. It's about making it harder for you to commit the tasks that you know you shouldn't be doing. So, for example, one of the problems I had back in the day was I couldn't hold trades. Just couldn't do it. And so I had to force myself gradually by making it harder and harder and harder for me to actually commit that, to the point where it got so extreme that I literally bought an iPod Shuffle of all things. It was this big. I know my drawings today are absolutely terrible, but whatever. I bought an iPod Shuffle, downloaded a load of stuff on it, and then when I'd enter a trade, I'd leave the house just with my iPod Shuffle, and I'd just listen to stuff on there. I'd go to the gym, I'd do other errands that I had to run or whatever. Um, and I'd leave my phone at home because I couldn't be trusted with it. And it wasn't until I started seeing the results coming in from not doing that, that I was, as in from not closing my trades early and I was actually holding my trades, that I was like, oh, wow, of course I'm going to stick with this habit because I can see the outcome from it now. And that is an example of making it harder in your environment to do the things that you know you shouldn't be doing. And really, the best combination is using both of these two things together. The best combination is using all three of these things together, using internal, using external, together in harmony. Now, of course, none of us are perfect. There are phases where I've done both of these brilliantly, other phases where I've kind of been scattered and all over the place. But one thing I can say is that when I've been through a period of doing more of these things, the better I've done, the better I've felt, the better decisions that I've made. And so, if I had a choice, I would always try and aim for these as possible, as much as possible. And so when I say prepare your mind, this is what I mean, guys, because you are going to run into problems. You are going to run into times where you want to break your rules and you don't really know how to stop. And so doing this stuff is really what would have taken off a huge chunk of this journey of mine. But yeah, bit of a scattered video today, guys. But I hope you've enjoyed. If you like more help, whether that's one-on-one, whether it's just with the program and the community in there as well, links are in the description for that. But yeah, hope you have an amazing rest of your day and hopefully see you soon. Take care, guys.